Hi everyone, and thank you so much for watching my channel The Witty Turtle. So in this particular video we are going to study section 38 subsection 2, which speaks about assets which are not exclusively used for business or profession, right? So before starting the provision of this particular section, we should revise section 30, section 31 and section 32, right? So what did we learn in section 30? Section 30 speaks about uh, rent, rates and taxes, insurance and repairs of particular buildings, right? So what is allowed and what is disallowed for owners and owners and tenants, that is mentioned in section 30. Similarly, in section 31, what provision is laid down? It speaks about repairs and insurance on plant and machinery and on furnitures, right? So this is mentioned in section 31, and section 32 we have been studying till date, that is your depreciation. So let's start with section 38 subsection 2, which speaks about assets which are not exclusively used for business or profession, right? So here building, plant and machinery and furniture, all three assets are included. So where any plant or machinery, building or furniture is not exclusively used for business or profession. For example, this is a car, okay? So this car is 60% used for business purpose and 40% used for personal purpose. Okay, so in this case, what is happening? This car is not exclusively used for business purpose only. Business and personal दोनों use हो रहा है यहाँ पे. So in this cases, in the case of these kinds of assets, where the assets are used for both personal and business purpose, what happens? The deduction claimed under section 30, section 31 and section 32 is proportionately allowable for business purpose. For example, there is a depreciation of 4 lakhs on this particular car, okay? There's a depreciation of 4 lakhs on this particular car, and this car is being used for business purpose for only 60%. Only 60%. So in this case, what happens? The depreciation allowable to this car under that particular business is up to 2,40,000. Why? Because 4 लाख का आपका depreciation हो रहा है and 60% is being used for business purpose. So it is allowed proportionately, right? So proportionately आप अगर करोगे तो कितना depreciation allowed हो रहा है यहाँ पे? 2,40,000. Now, let's read what is written in the law. It says that where any building, machinery or plant and furniture is not exclusively used for the purpose of business or profession, then the deduction under section 30, section 31 and section 32 shall be restricted to a fair proportionate part which the assessing officer may determine having regard to the use of such asset for the purpose of business or profession. So what is it saying? The deduction claimed under section 30, 31 and 32 is restricted, right? Is restricted up to a fair proportionate amount, which in this example is what? 4 lakhs ka depreciation hai. So how much depreciation will be allowable? Only 2,40,000. Why? Because this particular asset is being used for the business purpose for only 60%. 4 lakhs into 60% is 2,40,000. Understood? Right. Now, the next concept that we are going to study today is depreciation on power generation assets. Right? Why these particular assets are being specifically termed in the law? Because we know that there are two methods of depreciation. One is SLM and another one is WDV. But SLM method is allowed for only those assessees who are engaged in the business of power generation and power distribution, right? So here we are talking about those assessees who are engaged in the business of power generation and distribution, and they have opted for SLM method. Okay, SLM method of depreciation. Like, you should not be confused here that power generation assessees can choose either WDV or SLM, right? So this particular section, which is your section 32, subsection 1 and clause I. So this particular section is applicable for those SSEs who are engaged in the business of power generation and distribution, and they have opted for SLM method, right? So what happens, an SSE who is engaged in generation and distribution of power, they have got an option in the very first year of their operation, in the very first year of their incorporation, that they can choose either SLM method or they can choose WDV method, right? So once they have chosen SLM method, then for the entire life, for the rest years of their life, they have to follow this SLM method only. So this option of choosing between SLM or WDV is a option which can be redeemed once in a lifetime, right? So now the next point is that when the SC is choosing for SLM method, so in this case what happens, the block of asset principle shall not apply here, right? Because block of asset principle is applied only in case of WDV method, right? But in case of SLM, this block of asset concept is not at all applicable. Now the next thing is that where the SSE engaged in generation or distribution of power has opted for SLM method, so in these cases additional depreciation is again not allowed on them, right? Additional depreciation is not allowed on them. So now here we will understand that if there is a sale of asset, right? For example, this is a power generation unit, they have certain assets, and they are planning to sell a certain asset, and where SLM method is being used for depreciation, right? So in this case what happens, so here individual asset system is being followed. So in the case where your selling price is less than WDV, selling price is less than WDV. So in this case what happens, the balance amount is known as your terminal depreciation, and this will be allowable under section 32 subsection 1, and it will be treated in the debit side of P&L, right? It is allowable as a kharcha, as an expense in the debit side of the P&L. For example, your selling price is rupees 70 lakhs, okay, and your WDV is coming as rupees 80 lakhs. So the remaining 10 lakhs rupees is known as your terminal depreciation, and it will be allowable in the debit side of the P&L under section 32 subsection 1, right? Similarly, in case where the selling price is more than WDV, selling price is more than your WDV, so in this case what happens, the least of the following shall be taxable under your section 41(2), right? Your the least of the following, the first is depreciation allowed till date. Till date, what is the amount of depreciation that is allowed, and the second is what, your selling price minus WDV. In दोनों में से whichever is the lower amount, that will be taxable. Now here another thing is that in case the selling price exceeds your actual cost of the asset, right? For example, ये asset हमने खरीदा था at ₹10, okay, and we are selling this particular asset at a price of ₹12, right? So what is happening here? So here you are having a capital gain in case of this asset when you are selling it, capital gain of ₹2, right? ₹2. Similarly, this asset is being used for some years, so after a few years the written down value is how much? It is, for example, ₹6, right? So the difference between your WDV amount and your actual cost is known as your notional profit, right? For example, take out your pen and paper and write this example where your the cost of the asset is 100, and your depreciation is 10% at SLM method, and you are selling the asset at a rate of 117, and you are selling it after 2 years, okay. So what is happening here? Your selling price is 117, and if you calculate depreciation for 2 years at the rate of 10% in SLM method, then your written down value will be how much? 80 rupees, right? 80 rupees. So in this case, if you deduct selling price minus WDV, then you're getting how much? You're getting 37 rupees, right? So out of this 37 rupees, your 20 rupees, that is your actual cost minus WDV, your 20 rupees is how much? It is your notional profit. It is your notional profit, and this will be taxable under your PGBP head. This will be taxable under your PGBP head. Similarly, your selling price is 117 and your actual cost is how much? Your actual cost is rupees 100. So in this case, you are having a short-term capital gain of short-term capital gain of rupees 17. 117 minus 100, that is your 17 rupees, that is coming as your short-term capital gain under section 50A, right? I hope this is clear to you. You can simply read this particular concept from your book after watching this video, and if you have some questions on this, then you can solve it after this. I really hope you have understood both the concepts that we discussed now. And if you find this video helpful, then please hit the like button, subscribe to my channel, The Witty Turtle, and also don't forget to hit the bell icon and share this video with your CA and CMA final friends.